Hello viewers, I have good news. Jamaica's financial system remains stable for the financial year 2019.
Yes, both deposit-taking and non-deposit-taking financial institutions like banks, credit unions, and insurance companies have remained profitable while maintaining adequate levels of capital. This allows them to absorb financial shocks, such as what we're experiencing now with the pandemic.
You remember Dr. Leo-Rey Gordon? Well, he's back today to speak to us about Jamaica's financial system stability. I'm Sheena. Welcome back to Centrally Speaking.
And I'm Anna. Centrally Speaking is a program that opens up the conversation about important matters of economics and finance that have an impact on your life.
Before we get into today's discussions, let's check in with the streets.
Our economy wasn't that great before, so it's really put a big dent in the economy. A lot of people are suffering in Jamaica. The people that aren't suffering are the people that have people abroad that are trying to assist them, even though they're in the same kind of situation. But Jamaica's situation is worse because our money is not valued nothing. 130 to $1 US, we're only 1 hour away from the United States of America. Trinidad and Tobago, Antigua, their money is less than Jamaicans' money, and they are not as developed as we are.
COVID has affected Jamaica in a whole lot way. First of all, it affects us as a barber. People are not coming in. Everything is going slow. We're not making any money. So right now we just have to accept the 1 and 2s that are coming in, and we just have to cut our costs so that we can survive.
Well, first of all, it has affected the entire world in a negative way. And in terms of Jamaica itself, we have seen where a lot of jobs have been lost and the economy is under pressure. We have been compelled to borrow 520 million US from the IMF, so we are more fall back in more debt. And as times go by, we don't know this based on this uncertainty.
Well, really, bad for me. I'm still working, I do my business on the side, but me know people who not working, take them a long time to find even them food and so on. Sometimes even me as a pastor have to assist and help some of them.
Well, the COVID-19 has affected the economy in many ways. I can speak, for example, from a school teacher perspective. For me, I didn't see the need for the internet, and now it is incurring over $5,000 that I didn't really bargain for. I noticed a number of my students are unable to come on to do their work because they are unable to afford the data necessary to do their work. And there are many persons around me, I know they have been losing their jobs, or they have been working like 2-3 days instead of an entire week. So it has far-reaching implications.
Welcome back to Centrally Speaking. Today we are breaking down financial stability with Dr. Leo-Rey Gordon, Head of Financial Stability Department at Bank of Jamaica. Dr. Gordon, welcome to the program.
Thank you, Sheena. Nice to see you again, Anna.
Hi, welcome back.
Thank you.
All righty.
So first off, how does Bank of Jamaica assess financial stability?
The Bank of Jamaica has to ensure that we have a team dedicated to looking at systemic risk, and that is the Financial Stability Department. In the department, we have 2 main units, what we call the risk management unit, which focuses on our stress testing approaches, and as well our macroprudential policy units that looks at the development of policy for managing systemic risk. And we utilize mainly economists with expertise in financial application.
And by systemic risk, you mean risk to the financial system?
Absolutely. By systemic risk, we mean that type of risk that has a potential to impact many sectors.
Right. Okay, right.
And the real economy.
Okay.
So what we try to do is monitor developments across all types of financial entities, banks, insurance companies, securities dealers, you name it. And we aggregate and correlate those developments with economic developments. And what we have at the bank, we have established a framework for assessing systemic risk. This framework has what we call 5 intermediate objectives.
Okay.
And these objectives include, first, assessing whether the rate of credit growth and financial expansion is excessive, or if entities are using too much debt to finance that asset growth.
Okay.
Secondly, and equally important, is the ability of our financial sector to cover pools of liquidity. So the extent of liquidity coverage, we assess and monitor. We as well...
And pools on liquidity mean?
Right, so for example...
A run on a bank?
A run on a bank,
right.
Exactly. You have it. As well, we look at diversification across the sectors. We want to see where our financial sector is diversified in their asset exposure across the various asset classes. Critically as well is what we call our interconnectedness assessments. So you must have heard the concept of Contagion.
Right.
Or even watched the movie Contagion.
Right.
Right? So we have those
from that.
we have those similar types of risks in finance.
Right.
How easily can one shock or stress spread from one entity to another?
Okay.
So there we undertake significant mapping of the interconnectedness. And finally, in this framework, we have an overall view of the resilience of the sector to withstand shock through our stress testing approaches.
Okay.
So that's how we assess stability.
All right. So those are your assessment measures. So what has your assessment measures revealed for the last financial year in 2019-2020?
Let me say that the bank, we routinely and regularly assess these developments, and we publish our assessments quarterly, and our main publication is our annual financial stability report, which we publish at the end of March each year. In addition to that, we try to educate the public on all the data and indicators that we have assessed each quarter, and that's on our website. What our most recent assessments have shown is that the system and the financial entities are well capitalized. Entities hold capital above the minimum required, and this means that they're able to, for the most part, absorb common shocks without having any disastrous impact.
As shocks as the one we're experiencing now?
Exactly. Exactly. Right. We know that with our current situation, economic activity has slowed, which is a significant shock to the system. Right? Our other main finding is that the system is diversified in its assets exposure. So what we want to see as a central bank is that there aren't what we call concentration risks. We don't want to see all entities investing in the same bond, for example, or giving loans to the same company. So our assessment shows that we have a fairly good diversification of asset exposures. We have loans going to private sector, to companies. We have loans going to households. We have other investments in equities, bonds, and overseas. So, and real estate as well. So we view that our asset exposures are well diversified.
How do financial entities ensure resilience in less than ideal macroeconomic conditions?
This is very important. So as we said before, for our financial stability assessment, we aggregate the combined activity of our entities, and we try to correlate that with economic developments. Financial entities specifically are guided by the supervisory rules and regulations that are outlined, for example, in the Banking Services Act. And as well other prudential and regulatory guidelines coming from the Financial Services Commission. And there we have dictates in terms of governance, capital, liquidity, and exposures. So those frameworks allow for individual entities to ensure their individual risk exposures, and as well helps to ensure that in aggregate we have a sound financial system.
I just want you to revise the point for me about ensuring that your income is stable, because currently we have a pandemic one of the results of which has been destabilization of income. So how do we do that in a current situation as this?
Very important, very important. I think oftentimes we forget that we have to be forward-looking in our own personal financial planning. What we do in the Financial Stability Department at Bank of Jamaica is often to try and have a view of what the next 6 months, a year, into 2 years will look like. Similarly, we need to try and have an outlook for what we call the medium term for our personal lives. Let me give you an example. We need to buy a car, right? Or we are interested in expanding and buying a house. We often sometimes look at what our income is today, if we can manage that debt.
Right.
What we have to do is to ensure that we as well view our income over time to ensure that as we accumulate debt, because when you buy the house, what's going to come with the house? You're going to need to have the entertainment system.
True.
Right? You're going to need to have the marble tiles,
Yes.
right?
Yes.
And your Netflix, right? So there we have a risk of accumulating debt while not focusing on our forecast or expectations for income over time. So that's equally important.
Okay, and I want you to share with us how Bank of Jamaica ensures stability.
We try to do our best, and there are a number of components that go into that.
Right.
One, which I had mentioned at the top of the program, which is our surveillance. We have to ensure that as much as possible, we have complete view of what's happening in the system and the economy. We look at over 100 data sets to, as I said before, try to aggregate and correlate.
So give me an example of what kind of data set.
We look at, for example, the income statements of our reporting entities.
Okay.
We look at balance sheets of banks. We look at, importantly, the interconnectedness of our financial institutions.
Okay.
So, for example, one of our most interesting assessments is what we call our Contagion stress test.
Okay.
So we're able to map the extent to which weakness in one entity can propagate to other entities and the system as a whole. So there's where our surveillance is really important.
Right.
Secondly, what the bank does to manage the risk is to communicate the findings. We believe that communication can help change behavior.
Right.
So we have a number of avenues by which we publish our assessments. We have our financial stability report that we publish annually. We as well have shows such as this, where we try to communicate our views on stability and have you lovely ladies, have the public rest assured. Equally important as well, let me mention, is our Financial System Stability Committee.
Right.
So the FSSC, which is a statutory committee outlined by the Bank of Jamaica Act, which includes our regulators and the governor of the Bank of Jamaica, as well as representatives from the Ministry of Finance and the Jamaica Depository Insurance Company.
Okay, so several agencies are represented.
And several agencies are represented to outline policies for the system.
Okay.
Right.
And then you have the emergency liquidity facility.
Absolutely, absolutely. And if we are in dire needs, there's what we have called an emergency liquidity facility that entities are able to access for emergency needs.
Dr. Gordon, as always, very informative. We want to thank you for joining us today.
Thank you, Sheena. Thank you, Anna.
Yeah, it's good having you back.
So viewers, you heard it from a BOJ expert. Jamaica is financially stable.
And speaking of stability, do you know what the world's most valuable foreign currency is? Let's find out in today's Fun Fact.
What do you think is the world's most expensive currency? If you guessed the British pound or the US dollar, guess again. As of May 2020, the world's most valuable currency is the Kuwaiti dinar. A Jamaican would need almost $500 to buy one Kuwaiti dinar. So how does a country with only 4.8 million people have one of the highest valued currencies in the world? Nestled between Iraq and Saudi Arabia, Kuwait is a small country in the Arabian Peninsula. Most of the country's GDP comes from exporting oil. Oil actually makes up about 90% of all the goods that are exported from Kuwait. Kuwait also has one of the lowest unemployment rates in the world. And get this, those employed do not pay income tax.
So I know you enjoyed this week's topic on financial stability, but you might have missed a couple points. So here are this week's fast facts. Whew. Number one, the Jamaican financial system remained stable for 2019. Yeah, that's good news. Number two, a sound local economic environment allows our financial institutions to plan more confidently so that they can deliver services in a reliable manner and at an affordable cost. Number three, among the measures implemented by Bank of Jamaica to address the possibility of reduced supply of the Jamaica dollar, they include offering long-term repos, reverse foreign exchange currency swaps, and reactivating special lending facility to banks and other DTIs. Number four, Borrowers must ensure that they can manage the debt and credit they receive. And number 5, communication is important for managing risks. That's it for this week's Fast Facts.
Well, that's it for our program today. Follow us on Twitter at Central Bank JA or on BOJ's Facebook page and our YouTube channel. You may also visit our website at www.boj.org.jm.
I'm Anna.
And I'm Sheena.
See you next week.
Centrally Speaking is a production of Bank of Jamaica.